Hello, I'm John Gaver, and I would like to talk for a few minutes about abolishing the IRS. A lot of candidates and seated politicians seem to be jumping onto the abolish the IRS bandwagon. But the problem is that most of those politicians who use that phrase aren't backing it up with a plan that will allow the IRS to actually be abolished. For most of them, it's just a soundbite to generate applause. So let's look at the tax plans that these politicians claim will abolish the IRS and determine just which plans will and will not allow that. Now, if we're to abolish the IRS, we need to understand why it exists as it does. And that reason is the tax gap. It's the amount of legally owed taxes that are not paid on time. And currently, that number stands at a whopping $450 billion per year. Hey, that's 450 billion reasons why the IRS is primarily an enforcement agency with their own building and more than 86,000 employees. But let's look at it from a different perspective. If everyone paid their taxes on time, the IRS would be nothing more than an automated mail processing center. It would fit in the basement of the U.S. Treasury building and employ a few hundred clerks or something. Do you see what this means? The IRS is about enforcement. So if any tax reform plan is to abolish the IRS, it has to demonstrate an ability to eliminate or materially reduce the size of the tax gap. Now today, we have roughly 158 million unique taxpayers. Now, since under an income tax, it takes only one person to commit tax fraud, every taxpayer represents an opportunity for tax fraud. And that's why all taxpayers are subject to being audited at will. But neither of the flat income tax bills in Congress, nor any other income tax-based proposal for that matter, does anything to materially change those numbers. So if a flat income tax can't reduce the number of opportunities for tax fraud, what does change? Think for a moment. What is it that a flat income tax eliminates from the tax code that might actually help reduce the tax gap? If you're like most people, you're probably thinking of the term tax shelters. It seems like a good answer, but it's wrong. It is, however, the answer that we've all been conditioned to give in response to that question. But in fact, eliminating tax shelters will have very little effect on the tax gap. Now, to understand why, we have to look at what makes up a tax shelter. See, to have a tax shelter, you have to employ at least one of four features in our current income tax code: adjustments, deductions, exemptions, or credits. If you don't employ at least one of those features, you don't have a tax shelter. Now, as it turns out, the IRS provides us with specific tax gap data on those four features. In their latest tax gap report, you can see that the IRS breaks out those features into just two line items. They total just $45 billion. That's a mere 10% of the $450 billion tax gap. No other part of the tax gap changes. The non-filing gap doesn't go away, nor does the underreporting gap for both individual non-business and business income, nor the underreporting of corporate income, nor any of several other types of underreporting and underpayment. All those things stay the same under a flat income tax. So even after eliminating all tax shelters, we're still left with $405 billion in unpaid taxes. So the most that we can reasonably hope to achieve under a flat income tax would be to reduce the size of the IRS by a mere 10%. Now, of course, flat tax supporters will try to tell you that, under a flat income tax plan, tax evaders will start reporting all of their income. What, are these people going to have an epiphany or something? The flat tax supporters offer up various reasons for this, but if you consider how the IRS works, you'll understand why none of those reasons hold water. Just ask yourself this question: what will IRS computers do when a tax return shows an unexpected increase in income from some new source, especially if it's cash-based or offshore or something like that, but nothing else has changed in the taxpayer's life? Do you think it just might raise a big red flag for auditors? It sure will. It's a safe bet that anyone who reports income from previously unreported sources will be audited. And not just for the year in which they reported all of their income, but for the 6 prior years when they were hiding that income. Now, in reality, if a flat tax were to become law, tax evaders, rich and poor, would be alerted to this audit risk on thousands of internet sites. All the attorneys would be talking about it. Underreporting wouldn't change in the least. Now, the point to remember, and burn this into your mind, as long as income is taxed, there is absolutely no possible way to abolish or even materially reduce the size of the IRS. Now, by contrast, under the fair tax, the IRS becomes completely superfluous. That's because the fair tax would be paid at the cash register on new retail purchases. Now, the roughly 25 million retailers would then remit those taxes to a state, a big word, state sales tax administration agency. Now, 45 of those agencies already exist. And now those state agencies would in turn remit taxes to the federal government. So to see the audit trail, just turn this around. Under the fair tax, the Treasury Department would audit those who remitted tax to them, the 50 state agencies. Those state agencies would then audit a portion of the roughly 25 million retailers who remitted tax to them. And here's the big thing. Nobody would audit you. That's getting the IRS completely out of your financial life. Now, as for reducing the tax gap, those 25 million retailers each represent a choke point for auditors. That's 1/6 as many audit points as under any form of income tax. So for tax evasion to be as bad under the fair tax as under any form of income tax, 6 times as many people would have to be willing to commit tax fraud. And that's just not going to happen. So to recap, we have a flat income tax that can't possibly reduce the size of the IRS enough to make any real difference, while the fair tax completely abolishes the IRS and puts the responsibility for collections into the hands of state agencies that will audit only retail businesses. So I urge you to pass this information on along to candidates and elected officials, especially if they support any form of income tax. You've seen the math. It's based on IRS data and it's indisputable. You've also seen how the fair tax gets the government completely out of your financial life. So please pass this on, but just be alert for the spin. If a candidate or sitting politician tells you that we have to pass a flat income tax so we can abolish the IRS, you know he's been drinking the DC Kool-Aid and that he hasn't done the math. We can't have it both ways. Only the fair tax really does abolish the IRS. If you'd like to know more on this subject, please check out The Rich Don't Pay Tax, or Do They? Also, watch for the upcoming book, The Tax Deception. In that book, there will be a whole chapter covering the issues presented in this video, along with 19 other chapters, each comparing the fair tax and the flat income tax on one of 20 individual goals for tax reform. But whatever you do, please don't buy into the spin that a flat income tax will allow us to even marginally reduce the size of the IRS. It won't, because it can't. If you really want to get the IRS out of your life, then I urge you to support the fair tax and support candidates at all levels of government who support the fair tax, because the fair tax is the only tax reform plan that will absolutely abolish the IRS. Thank you.